The broadcast is now starting. All attendees are in listen-only mode.
Okay, everyone, how are you all doing? Happy Wednesday. Welcome to our weekly webinar. All of you iTraders, traders, and joining us, you guys from Facebook on the iTrader.com homepage. Welcome. My name is Neil Green, and I'm doing these webinars every Wednesday at the same time at 3 p.m. GMT time in the afternoon, in order for you guys to get some information about the events taking place on the same week, showing you what's going on in the market right now, and give us some kind of a view in order for you to know how to take your trades and make some money in this market. So welcome everyone, welcome. I see some familiar names and new names as well. You guys from Facebook, thank you for joining us every Wednesday 3 p.m. GMT time, talking about the events of the same week. And this time we're going to talk about the FOMC minutes. Okay, just want to do a technical check to see that you can hear my voice and see the screen. Guys, you on in the webinar, just write me down. You have a chat window. If you have any questions during the webinar, you're more than welcome to ask me. I'll try to answer your questions in between. Of course, I'm going to leave some time for some Q&A, questions and answers session at the end of the webinar, in order to try to clarify everything. And that's about it. Okay, so let's talk business. Everybody can see the screen and hear my voice. Just before I start, technically see that we're good. Just write yes or something on the chat window. I'll very appreciate it. All right. Okay, you can stop. I understand. All right, let's start. So, what do we have today? What's going on today in the market? FOMC minutes. All right, FOMC minutes. The FOMC minutes will be published today at 7 o'clock GMT time. All right. The FOMC, which stands for the Federal Open Market Committee. As you probably know, the Fed is the central bank of the United States. The United States economy is the strongest and the most important economy in the world. Affects the whole market, actually. And the FOMC, these are the guys, this is the Fed members. These are the 16 guys that sitting there 8 times a year and decide what will be the interest rate in the United States. Of course, it affects the interest rate in the whole world, especially the Western world. So the FOMC, Federal Open Market Committee, is responsible for the Fed interest rate. The group of FOMC members discuss 8 times a year the economic situation in the US. Okay, 3 weeks after each meeting, the protocols, which are minutes, are published. Which means, for example, in 2017, the first interest rate that we had took place on February 1st. All right, we have 8 interest rate decisions a year. The first one took place on February, the first day of February. Interest rate, by the way, stayed on 0.75%, if you know it. We had a webinar talking about how to trade it. I'm going to show you the reaction of the market in just a second, what happened back then. And 3 weeks after the interest rate decision, we get the protocols, what we call FOMC minutes, and we get, all the expectations, what the Fed talked about, what the Fed members talked about in the meeting. So right now, we're talking about 3 weeks after the interest rate decision on February 1st. We want to see what happened in this meeting, and when it's published, of course, it affects the market strongly and gives us trading opportunities. Okay, great. Let's go on. So global interest rates are extremely low, as you probably know, in the Western world. In the United States, all right, let's talk about it. The crisis of 2008 was a trigger for lower rates. All right, if you remember what happened in 2008. When the U.S. economy felt very, very strong after the high-tech bubble, people got mortgage from the banks and loans with very, that were very convenient without putting a down payment. And the banks just gave out mortgages and loans for almost for free. And there was a huge crisis because people couldn't pay back the loans. Banks crashed. The market fell down. Okay. and then interest rate went all the way down to 0.25% and stayed the same way until December 16th of 2015. Was the first time after 7 years that the Fed have decided, and Janet Yellen, the head of the Fed, including the 16 members, have decided to raise interest rate from 0.25% to 0.5%. And the second time it happened actually took place on December 14th of 2016. We're talking about 2 months ago, from 0.5% to 0.75%. In a press conference followed by the last interest rate, we're talking 30 minutes after the interest rate decision, Janet Yellen actually said that they expect the market to have 3 hikes in interest rate during 2017, and we're talking about only 8 times that they can do it. The second time will take place on March 15th, and we expected 2. Okay, we expected that she will say it's going to happen 2 times. She said 3, and the market reacted to that. So the crisis of 2008 was the trigger for lower rates. Okay, the U.S. could be the first country to start recovering from the crisis. That is the reason rate decisions in the U.S. are extremely interesting. Okay, showing you what's going on in the market. Let's open the MetaTrader. Let's take a look. This is, for example, the Dow Jones. All right, the Dow Jones is the oldest index in the United States. Represents the 30 companies, low-tech industry companies with the highest value in the United States of America. Let's take a look at the monthly chart. All right, each candle here represents 1 month. A green candle, of course, means that the stock market is going up, and the red candle means the opposite. Each one represents a month. So what you see here, this one represents February of 2015, January, December. Since the elections, all right, for 4 months, the market right now is the highest point ever. All right, it's booming up. There is no better time to go into the market than right now. You can see the reason. Let's zoom out a little bit, and you can see this is 2008. You see this crisis? Okay, the market just crashed down. And from February 2009, it goes up all the way to now. All right. So this is for you in general. If you would take a look on a daily chart, which means that each candle represents 1 day, the last interest rate took place. Not last interest rate decision, but the last time that interest rate went up from 0.5% to 0.75% was on December 14th, which is let's see, which December 14th, which is right here. So you see the stock market went down the same day, because when interest rate goes up, the currency gets stronger. You see the stock market went up, and then it stopped when interest rate went up. Look what happened to the US dollar. Let's take the US dollar here. Put some lines here. You don't have to, just delete it. And this is December 14th right here. You see this green candle? Okay, so the dollar got stronger, stock market went down, but just a little bit, okay, just chilled the uptrend on the stock market. So it affects the market strongly. So we're gonna have, and of course creates, we made a lot of money here, by the way, guys. All right, this huge green candle, that's a lot of money, okay? If we're talking here, this is the US dollar versus the Japanese yen. We're talking on a hike, daily hike of, let's see, from low, from 1477 to wow, it was almost 300 pips, all right, almost 300 yens in this case, and we're talking about a lot of money that we can make in this day, because the thing is, the price of the dollar went up not because of the interest rate went up from 0.5% to 0.75%, because we expected it on the forecast, but because of the reasons that Janet Yellen talked about, 3 hikes in 2017 rather than the 2 expected. So, and we're going to get, of course, the protocol, the FOMC minutes today for the February, for the interest rate decision that took place on February 1st. Okay, investors will try to understand today if the meeting by the FOMC on February 1st was positive or negative. Okay, you can check it on Nasdaq.com. You can check it on CNBC. You can check it on, you know, whatever financial news you look at. just take a look about the headlines on the FOMC. Okay, if you don't know what it means, very easy. Go to the MetaTrader, look at the trend. You remember, the trend is your friend. Hug him, all right? Look at the US dollar. We're gonna take a look on some assets later, but guys, take a look on the reaction of the market following the FOMC minutes that will be published today at 7 o'clock GMT time, and trade with it if you like. Okay. Now the Fed should hike rates 3 times in 2017. Okay, this is very important. This is what we expect to happen. We have 8, as we said, 8 chances for the Fed to raise interest rate. We had 1, but interest rate didn't go up. Now let me give you some kind of maybe something that will help you. Out of these 8 interest rates, we have only 4 that followed by a press conference of Janet Yellen 30 minutes after the interest rate decision. Now the last 2 hikes that took place on December 2016 and on December 2015 was when we had a press conference after that. Okay, so on February 1st, interest rates stayed on 0.75%, but on March 15 will be the next one, but will be the first interest rate decision during 2017, followed by a press conference of Janet Yellen, the head of the Fed, 30 minutes after. And just remember that she said we expecting 3 hikes, and we have 4 interest rate followed by a press conference during 2017. So you can, okay, so this is something that you should pay attention to. Now the next decision will take place on March 15th, as I said. March 15th, this is the date that you have to remember, all right in front of you, because this is going to be the next interest rate decision in the United States. And the FOMC minutes, the protocols that we're gonna be published today, we're going to give us a mirror of what happened on February 1st, okay, about the rest of the year, the rest of 2017, and the expectations of the Fed and the US economy. So pay attention. Now a good minutes today could raise expectations for rate hike on March 15. This is how important it is, all right? And the market will react today to the FOMC minutes, so of course you can trade on that. Higher rates usually affect the related currency and banks. Assets to trade today include, okay, US dollar versus majors, which means euro versus the dollar. Just pay attention that if you trade on the euro versus the dollar, for example, when the dollar gets stronger, the euro versus the dollar goes down. Because here the US dollar is the secondary currency, not the main. US dollar versus Japanese yen, it will go up. If, okay, or will go down, depends. So pay attention if it's the main or the secondary currency. Back to the PowerPoint. So higher rates usually affect the related currency and banks. Usually when interest rate goes up, the currency is getting stronger, the stock market is getting weaker. The reason is very, very easy. Okay, think about it. If you have $100,000 in whatever, okay, in the bank, if interest rate goes up, you would put it in the bank and get more money without risk. And if it goes down, people go to the stock market. So it depends on the interest rate. Assets to trade on US dollar versus majors, US banks. US banks go with the currency, goes with the interest rate. Right now, interest rate went up from 0.25 to 0.75% in 2 years after 7 years that it didn't go up. So if you look at the US banks, just like all the stock market, but at the highest point ever, guys, it's so easy to trade these days. Look at this. Look at a Citibank daily chart. Okay, look at this, highest point ever. Okay, Goldman Sachs. Look at the US banks. It's crazy. I put a resistance line here. It crossed it. You see it technically. Okay, let's delete it. You see it going up. Let's take a look on whatever you choose. What do you want? Okay, JP Morgan, JPM. Where is JP Morgan? You find it? There you go. Now the stock market is highest point ever. Interest rate goes up, means the banks make more money. US banks are going up as well. And of course, right now the sentiment in the market is highest point ever. Everything is going up. Gold and silver, of course, metal commodities you can trade, work with opposite correlation with the US dollar, which means Usually what we learn from history that when the US dollar goes up, gold goes down, and the opposite. So you can trade on both. Okay. Market sentiment is positive. Okay. The current market probability for rate hike on March 15 is by all experts 32%. So we expect by the analysts for the interest rate to go higher than 0.75% on March 15. The probability is 32%. US banks and indices are close to their record highs. Actually, US banks are very close and indices are at record highs. Let me show you. Nasdaq represents 100 technology companies with the highest value in the market. Daily chart. Look at this. Let's zoom in. Each candle represent 1 day. Highest point ever. Monthly. Boom. Just going up. S&P 500, same thing. Dow Jones, same thing. Okay? In the last 4 months since the elections, because of Trump policy talking about tax cuts and talking about government spending, all right, the market is booming and US dollar is getting stronger because of the interest rate going up. So it's very balanced and the US economy looks in a huge recovery at this time. And the market sentiment is very, very positive, as you can see. All right. So US banks, I showed you, and of course, good luck. What I like you to do, of course, remember always to combine the technical analysis with the fundamental analysis, which means put some key levels, put some support and resistance lines before the trade, before the event takes place today. Pay attention to the protocols, read it on the news, okay? See the reaction of the market. Know that the sentiment is positive and understand that these minutes, these protocols are going to affect the interest rate decision on March 15 strongly, add to what's going on in the market these days. Okay, US banks, US dollar versus all majors, and gold opposite correlation with the US dollars. Any questions, guys? Anything you didn't understand you would like me to clarify? This is the time I'm here for your questions, so go ahead. Okay. Okay, by the way, we'd like to thank you again, just like every week, for the emails you're sending me. Okay, I'm trying to answer all of you guys, but you know, pretty busy guy. Sorry, but I'm trying to answer all your emails, and so thank you for that, and you're welcome, guys. Okay. Any questions about the FOMC meeting, minutes? Anything you would like me to add? Okay, you see what's going on in the market. You understand the opportunities here? You understand the reaction of the market? Okay. All right, now that's great. Okay, so I would like to thank you very much for participating. Okay, put some levels. All right, if you look at the euro versus the dollar, of course, right now you see today. This is a monthly. I'm sorry. Today the dollar is getting stronger. You see it's red. The euro versus the dollar goes down, means the dollar is getting stronger. Okay, if you look at it, zoom out a little bit, you see since the elections here, US dollar is getting stronger, and if interest rate will go up on March 15th, we expect the US dollar to get stronger even more. And interest rate decisions are huge opportunities, guys. Okay, so pay attention to this. If you missed part of the webinar, if you can look at the recording on the link. I'll give you more than that. You can go to our homepage on facebook.com. Okay, go right ITRADER.com. I think you should click like, and then you'll be able to see. You're gonna get notifications for all my webinars, and you can just watch it from the beginning. All right, Jen, you answered your question. Okay, you can hear it from the beginning. Facebook.com on ITRADER.com. All right, you're welcome. Okay, guys, so thank you very much. I'm going to be here just like every week next Wednesday. Don't forget to join our webinar and email me if you have any questions, all right? I'll try to answer you. Join our webinars at 3 p.m. GMT time. I'll be here next week talking about oil and a weekly event that gives us huge opportunities to trade on oil. So thank you very much for participating and have a great one. All right, and pay attention to what's going on tonight at 7 p.m. GMT time. We're talking about what is it, almost 4 hours from now. Okay. Okay, guys. Thank you.